Welcome back to Gen W, where we break down the setups that matter most so you can trade smarter, not harder. This week we've got plenty to talk about. The S&P 500 and Nasdaq both hit new all-time highs, but we're starting to see signs of short-term exhaustion, a few key gaps below, and plenty of opportunities to plan our next move. Let's jump into the charts. Starting with the SPY, we hit fresh all-time highs last week, but saw strong selling into Thursday and Friday. If you zoom out, we're still in a cleanup trend, so no reason to flip long-term bearish. We've got two gaps below us, and that's where my focus is this week. Friday's candle closed with a long lower wick, meaning sellers tried to push us down, but buyers stepped in. That shows strength, but we'll need the next few days to confirm it. If we continue lower, I'm watching $674. That's prior resistance I want to see turn into support. If that holds, we could set a new higher low in the trend and start moving back up. On the upside, a break above $685, followed by a retest, sets up another run toward all-time highs near $690. I've drawn out multiple potential paths, not by likelihood, but for structure. And for me, path 1 or 2 would be the ideal higher-low setup that keeps this uptrend alive. Next up, QQQ. The tech sector still looks incredibly strong. We had a hard extension off that prior consolidation zone under 613 learn, and even though we pulled back Thursday and Friday, there's no major breakdown. Friday's gap up open saw some selling pressure, but buyers defended well. Any move lower could send us into one or both gaps below, but as long as we hold above $612 and $50, that's strong support from previous resistance. Like SPY, I'm watching for a new higher low before continuation. A push over last week's highs could send us back into breakout mode. IWM, small caps got hit last week after Jerome Powell hinted that another rate cut in December isn't guaranteed. We've now drifted back into the middle of this wide range, and that means patience. You don't enter trades in the center of a range, your best setups come from the edges. So for now, I'm waiting for price to test either the upper or lower boundary of this blue range before taking a position. No edge here in the middle. NVDA had another monster week, powered by rate cut optimism and continued AI hype. But after setting new highs, we've started to cool off. We've got equal lows from Thursday and Friday around $200. If we break under that and hold below, I'm watching $195.25 as the next support to form a daily higher low. A deeper pullback to $189.50 would still be healthy given how thin the structure is from the earlier breakout. Alternatively, if NVDA stays above $200 and chops sideways, that could turn into a bull flag. I wouldn't look to enter until we break $206.50 with confirmation, targeting the all-time highs at $210.60 to $212.10. Microsoft's chart is pretty choppy post-earnings. We closed around $518.50, and while there's not a clean setup right now, zooming out shows a potential double top pattern forming from late July. If we start drifting lower, watch the $500 neckline. That's the key support. A break under $500 opens a possible measured move down toward $472, but that's more of a late week or next week setup. Apple had a huge gap up on earnings Thursday, but most of that move sold off. We closed around $270.25, which is a key level. If we see early strength Tuesday, I'm watching for a push above $270.50s, then a retest of that level before continuation toward all-time highs. If we fail out of the gate, look for a pullback to $267.10 and possibly $264 to close the prior week's gap. That zone has former resistance turned support, which could offer a solid long entry back toward $270. Amazon also gapped up on earnings but saw some profit taking into Friday. I'm watching $238.75 as the first key support. If we can hold above that and turn it into a higher low, we could push back toward all-time highs. Even a deeper pullback toward $227.60 would still keep the overall uptrend intact and might be a great place to scale into long positions or add to core holdings. Google's been a quiet powerhouse lately. Strong post-earnings move and still trending well. Right now, two potential paths. 1, we consolidate near the highs and eventually retest that $291.65 all-time high, break it, and hold for continuation. 2, we get a deeper pullback, and as long as we stay above $250, the long-term trend remains solid. That level's the key pivot for me. Meta pulled back after earnings and is currently sitting just under its 200-day moving average. That green line on your screen. If we reclaim that 200 MA, I like the long setup back toward the 705.25 gap close zone, possibly even the top of this balance range at $733.50. If we keep moving lower, I'll look for a bounce around 607s where the lower gap could fill, still within the broader uptrend. Broadcom's giving us 3 clean setups. If semis stay strong, a break and hold above 327.25 opens a path back to all-time highs around $386.50. If we reject 372.25 early this week, that's a potential short setup targeting 359.25. And if we bounce at 359.25, that's your re-entry long zone for another higher low and run to new highs. It's a great chart for both sides. You just have to stay patient for confirmation. Oracle's chart is clearly bearish. We're in a downtrend and setting up what looks like a 3-push continuation pattern. If we break below last week's lows, I'm targeting a gap fill down to $244 using puts. If we push higher first and stall under $271, that's still a valid short entry. High risk to reward play back to 244s. Wells Fargo looks clean. We've got an ascending triangle forming, and a break above $87.45 would send us into new highs. If financials show strength, this could be a simple breakout play. Any break below the ascending trend line would invalidate the setup. MicroStrategy continues its downtrend. If we test and reject anywhere under $278.50, that sets up a put opportunity toward $240.50, which has been strong prior support. Nothing bullish here yet. Momentum still favors the downside. OKLO looks like it's building a potential head and shoulders pattern. I'm watching for a break under 130.40. If we get that and hold below, I like puts down to $110.75. Earnings are next week, so this isn't a swing candidate yet, but the setup is clean if it confirms before then. So to wrap it up, we've got healthy uptrends across most of the market, a few key gaps that could fill early in the week, and several names setting up for either continuation or perfect higher low entries. Trade your plan, wait for confirmation, and don't force trades mid-range. If this breakdown helped you get ready for the week, hit like and subscribe to Gen W so you don't miss next week's setups. Let's build that generational wealth, one smart trade at a time.